Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is Friday, December 14th, 2012. What a week it has been. The euro up all 5 days of the week, pushing up through the most recent highs that it's made, up around 130, 160, 130, 170 area, and really looking like it's going to go higher. We've got a new round of dollar bashing coming in here. The Federal Reserve extending their twist operation, continuing to do $85 billion a month in stimulus, and a lot of that has sparked another round of dollar bashing. So the euro is now the favorite again, and the dollar does not want to be held. Now, that being said, of course, that could just be a temporary thing. Economically, the U.S. starts turning around. That's a whole different ballgame. And once the news starts settling in that Europe is really not doing all that well, even though some of the numbers lately have been pretty decent, we certainly don't want to get too excited there and say that Europe is the place to be either. So it's just right now the better of the two places, and as such, the euro is up today about 85 pips. And as you can see here, breaking out above most recent highs. We look at the weeklies, we can see how we got a huge engulfing pattern on last week's range. So this week, very large range. Looks like we're breaking out now. Next week could take us up to the 133, 134 level. That's a very distinct possibility. So that would then push us up on the monthlies to the point where we would need to be to really turn this market around a little bit longer term and push us up to about the 145 level, which is still within the downward sloping channel here, but a very significant correction in the longer term chart nonetheless. So longer term still down, but short term very much positive here, and looks like it's going to go higher. British pound against the dollar, up about 63 pips today. A little bit, not quite as good of a week as the euro, but nonetheless still a pretty decent week. Right now about 160, 175, and it's pushing the most recent highs also, but not quite as hard as it was about 3 months ago, when it was up around 163. So looking for it to continue here. Doesn't look like it's going to abate at any time. On the weeklies here, we can see we're having this very strong week. So it looks like it will probably continue. It needs to take out the two highs that we made back here and here. That double top needs to be taken out, and needs to be taken out decisively for this market to really move. And on the monthlies also, we take out those highs, then we could run up to about the 167, 167.50 area. Technically, that would be about it, because longer term, of course, we have this kind of triangle thing working in here after this big long sell-off, so technically we should move down and out of there longer term. Of course, that could take 12, 18 months to happen, but nonetheless, longer term, that's what should happen. U.S. dollar against the Swiss franc. U.S. dollar getting whacked again today, down all 5 days of the week, pretty much the opposite of the euro against the dollar. Down about 60 pips today, back down to around the 91.75 area. And if we look at the weekly charts, we can see here how we're breaking out of this channel that we've been in, or consolidation period we've been in since summer last year, since really about July area. Let's see here if I can pull it up. September, actually, I'm sorry. So just about September. And we still got a few more weeks to go here, about 3 more weeks to equal the consolidation that we had back here. Now, just because we're breaking down here does not mean that that it's all bad. We did that back here, and that is not uncommon for that to happen. So all it means is that we could spend a week or two down here and then rally right back. And on the monthlies, well, monthlies still look fairly solid here. We had that spike low. We rallied up, fell back, rallied up. Now we're falling back still. And we are now in the 5th month down, which is really pushing the envelope as far as numbers go, and we really have not fallen off that much off of the highs that we made. So realistically, we're going to probably turn around here sometime soon, as we've been talking about, and start to rally up again. U.S. dollar against the Japanese yen had a wonderful week this week. Today down about 18 pips, so just correcting minorly, but the last couple of days quite a rally. We're up now 83.50 area. Looks very strong still longer term. We get into the weeklies here, we can see how very strong here. Looks like we're going to rally up even more. Elections are coming up on Monday there, so anything can happen, but the pressure is on to do something to devalue the yen against all currencies, not just against the dollar. So looks like next week we could rally a little bit, and then this month looks like we could take out these highs here, get up around 85. If we can close the month out at 85, that would be very positive longer term. So looks good though longer term. Euro Swiss today, very small range today, but and over the week kind of mixed about where we started. Overall though, looks very strong longer term. We bounced up and came back now, and if we can get on the weeklies here, we can see that spike low, same as in the dollar Swiss, rallied back, and then the Swiss National Bank has been holding it above 120, so we're still hanging in there above that 120, but it's starting to get its own momentum now and looks like it can rally. So we're looking for it to run up to about the 124 level longer term there. Euro yen up nicely all week, very strong all week. Today up 48 pips, all the way back up to just under 110. Now if we look at the longer term charts, we've been looking for this thing to break down, and it has not. We've closed now. This will be the fourth week above this trend line that goes all the way back to the middle of 2009, so just about 3 years. And so we have changed direction here. That's a little bit of a confirmation on the weeklies. And on the monthlies, well, we're now closing. If we were to close up here or even a little bit higher on the monthlies, that would be a decisive change, and would be significant enough to say that this market has indeed bottomed. So these lows down here would more than likely stay longer term. Now this is the 5th month up in a row, so we are pushing numbers again here, pushing the odds, and really would anticipate us getting up to about that 111 area, about where we were back in here. So about 111, and then falling back to a correction period, probably getting down to just under 100, and getting back to this trend line, which should be back around 100 by the time it got down there. So several months out it could do that, and then that would put in the bottom here longer term. We would need to work around in this area then. This is all would take place probably over the next 12 months. So you got a lot of time in there that needs to happen for this market to bottom. It's not going to do it overnight, and this is certainly not going to go shooting up, especially after all this damage back here, and then the steep downward motion that we have here for the last 4.5 years. So really don't see it doing that. Markets usually don't rocket right back up like that. That being said, still is indecisive at this point now, longer term, so staying away from this market altogether, but carefully watching it as time goes on. That is it for this week. If you have not stopped by FX Addicts, please do so. Feel free to contact me if you have questions about anything currency related or interest rate related, and certainly about FX Addicts if you have questions. Again, you can stop by www.fxaddicts.com, and my name's Tim, the Currency Professor. Thank you.